The Convergence of Crypto and AI, 4 Key Intersections. Summary. In his article titled The Convergence of Crypto and AI, 4 Key Intersections, author Kyle Samani offers an extensive exploration into the points of intersection between the rapidly evolving fields of artificial intelligence, AI, and cryptocurrency. Notably, Samani emphasizes the tremendous potential for innovation within this interdisciplinary overlap, considering the future implications of their symbiotic development. The primary focus of the article is an examination of 4 key areas of convergence, each revealing significant opportunities for advancement in the realm of digital technology and computation. Beginning with what Samani terms the Airbnb for graphics cards model, the article posits an innovative system whereby high-performance graphic cards, such as the NVIDIA A100, which have become essential for AI and machine learning (ML) workloads, can be rented out to fulfill the demand from AI researchers and developers. The escalating demand for such GPUs, already in short supply, is primarily driven by their integral role in model training and AI inference. However, the author notes that this model presents several challenges that need to be addressed for it to reach its full potential. Among these challenges is the fact that graphics cards come in various specifications, and not all are capable of handling certain AI tasks. Consequently, a successful Airbnb for graphics cards model requires a system to correctly match the appropriate GPU resources with the AI workloads they can support. This is further complicated by the fact that most foundation models today are trained on clusters of GPUs connected via low-latency connections. In a decentralized environment, latency increases significantly, demanding the development of new training processes to accommodate this change. Lastly, Samani points to a verification problem. It is hard to trust the output of an untrusted computer. This challenge, however, can be mitigated through the use of reputation systems coupled with cryptoeconomic staking, and in some cases, the deployment of new types of models that enable fast verification. The second intersection explored by Samani revolves around token-incentivized reinforcement learning from human feedback, RLHF. Here, the author investigates the potential for token incentivization within RLHF, where model users or trainees are rewarded with tokens. This incentivization model is seen as more likely to succeed in narrower, more specific models, particularly when the humans providing RLHF have a higher income outside of the RLHF work. Moreover, Samani provides examples of several industries that could potentially benefit from this model, including medicine, law, engineering, architecture, finance, economics, scientific research, education, and environmental sciences. The third area of intersection highlighted in the article is zero-knowledge machine learning, ZKML. Samani posits that ZKML can process and handle complex off-chain events in a trust-minimized manner, an especially valuable attribute for on-chain yield aggregators. These aggregators need to calculate the yields and risks of available pools before transferring the data to the blockchain, a computation that would be prohibitively expensive if performed on-chain. This situation presents a prime opportunity for ZKML to step in and streamline the process, performing the necessary calculations in a cost-effective way. The final intersection that Samani examines concerns authenticity in the age of deepfakes. With the ever-increasing sophistication of deepfakes, the maintenance of authenticity and trust in digital media has become paramount. The proposed solution to this challenge involves leveraging public key cryptography in conjunction with real-world identity verification. Blockchain technology, the cornerstone of many cryptocurrency systems, could provide a decentralized and tamper-proof identity registry to facilitate this. Samani further proposes 2 configurations to operationalize this system: embedded hardware and user-controlled software. In conclusion, Samani's article underscores the wealth of possibilities that the convergence of AI and cryptocurrency can offer across various sectors. The intersections discussed, namely the Airbnb for graphics cards model, token-incentivized RLHF, ZKML, and maintaining authenticity in digital media, represent a taste of the transformative potential that can be realized from harnessing the synergies between AI and crypto. By exploiting these intersections, it is conceivable that we can catalyze technological innovation, generate considerable value, and tackle substantial societal challenges, all while pushing the boundaries of what is technologically possible. Encouragingly, Samani extends an invitation to anyone interested or engaged in these intersection areas to reach out, thereby fostering a sense of community and collaboration, indicative of a willingness to further explore these concepts and their practical applications. Content type: article, blog post. Content publisher: Kyle Samani, Multicoin Capital. Publish date: June 2023. Content liquidity plus protocol lock-in with Rafa. Summary: the episode of On the Other Side features Rafa, a researcher and co-founder of Folklore, who shares his insights about the complex landscape of digital protocols, content creation, and digital communities. The conversation delves into the concept of content liquidity, discussing how creators essentially act as liquidity providers in digital platforms and the potential issues related to protocol lock-in. Here are the main points discussed. 1. Decentralized media, navigating protocol choices and community liquidity. The central point of this discussion is the complexities and considerations in choosing the right blockchain protocol for a decentralized media project. The founder of Folklore, a content curation community, shares their journey in decision-making process, considering factors like the ecosystem of available products, technical standards, fee structures, and community philosophy of a given protocol. They highlight the concept of content liquidity, akin to liquidity in DeFi, where creators must decide where to invest their community's attention and infrastructure for optimal growth. The inherent philosophy of protocols and the commitment they imply for a community is an important aspect of this decision-making process. 2. Challenges and impact of NFT standard interoperability and content liquidity. The most critical point discussed revolves around the interoperability issues in NFT standards, especially ERC 721 and 1155. While theoretically interchangeable, the lack of standardization across functions like minting and burning restricts these tokens' practical interoperability across different platforms and protocols. This has significant implications for content liquidity and creator choices, where decisions on protocol usage can affect the distribution and reach of an NFT. Further, this creates potential challenges related to content lock-in, where switching protocols may necessitate a significant reinvestment of time and resources. 3. Emerging power dynamics and the future interoperability of NFTs. The conversation revolves around the potential challenges and power dynamics in the evolving NFT landscape. A primary concern discussed is the potential for protocol lock-in, where the longevity and interoperability of NFTs may be limited by evolving standards and protocols. This issue could affect the migration of assets across different chains and could also impact contract creators' control over content. Additionally, there's an emerging interplay between protocols and interfaces, suggesting that both will have significant influence over NFT distribution, functionality, and access in the future. 4. Content liquidity and the future of creator-centric middleware. The conversation revolves around the challenges and potential solutions for content portability and interoperability in the world of blockchain and NFTs. They discuss the power dynamics between interfaces and protocols, and how decisions are made. The discussion leans towards 3 potential pathways: expanding standard sets, developing micro-protocols, and creating creator-centric middleware. Of particular interest is the concept of middleware that can seamlessly switch between different protocols, providing the best user experience. This approach hints at a future where protocols become commodities and platforms regain importance. Content type: podcast interview. Content publisher: On the Other Side. Publish date: June 2023. Bankless Weekly Rollup, first week of June 2023. Summary: the conversation between the Bankless hosts covers various news topics in the world of cryptocurrency. Here's a summary of the key events discussed. 1. Hong Kong Securities and Futures Commission's Crypto Rule Book. Hong Kong's financial regulatory body released a rule book for the cryptocurrency industry, stating that retail investors could start trading cryptocurrencies from June 1. 2. Three Arrows Capital bust. The speakers reminisce about the Three Arrows Capital event that happened the previous year. The firm, which is a significant player in the crypto market, experienced a massive financial loss, disrupting the crypto market. 3. China's crypto position. The hosts hint at a recent shift in China's stance toward cryptocurrencies, suggesting a reversal or 180-degree turn. 4. Celsius creditor payouts. The state of Celsius Network, a crypto lending platform, is discussed, specifically focusing on how much money creditors would receive back from the platform. For creditors with over $5,000, they would receive something different, although the hosts don't specify what that is. 5. WorldCoin fundraising. WorldCoin, a controversial cryptocurrency project, has raised $110 million, which has polarized the crypto community. 6. Asymmetrics protocol. The hosts discuss the Asymmetrics protocol, which is compared to Pool Together, but for Ethereum staking. It allows users to stake their Ether and then, instead of receiving a typical yield, they get anywhere between 0 and 1,000%. 7. Stablecoin supply decrease. The hosts noted a decrease in the total supply of stablecoins, suggesting that this might be because U.S. Treasuries are currently offering better yields. However, Tether's supply is at an all-time high. 8. Increase in Ethereum staking. A significant increase in Ethereum staking was reported, with 17.4% of all staked Ether deposited in May. The hosts express surprise at the high level of staking. 9. CX balances at a 5-year low. Finally, the conversation touched on the fact that Ethereum and Bitcoin balances on exchanges are edging towards a 5-year low, suggesting that more people are holding their crypto in their wallets rather than on exchanges, which the hosts see as a positive development towards a bankless society. 10. Non-fungible tokens, NFTs. The participants discuss NFTs and their recent popularity. NFTs are digital assets that represent ownership or proof of authenticity of unique items or content, typically on a blockchain. They talk about the speculative nature of these assets and how they have been used in meme coins. They highlight the importance of selecting the right NFTs to invest in, with a particular focus on blue-chip NFTs that are considered more reliable or of higher value. There's also mention of low-cap NFTs as a potentially rewarding investment, suggesting they are illiquid and undervalued. A key emphasis in their discussion is the cultural relevance of NFTs, which is where the value often comes from. 11. China and cryptocurrencies. The conversation then shifts to China's relationship with cryptocurrencies. They discuss a recent white paper from the Beijing Municipal Science and Technology Commission, which outlines support for Web 3.0 technologies, including blockchains and cryptocurrencies. They consider whether this might indicate a shift in China's approach towards digital currencies, which has historically been somewhat hostile. The discussion mentions CZ, Changpeng Zhao, the founder of Binance, and his perspective on this development. They also note a recent decision by the Hong Kong Securities and Futures Commission to allow retail investors to trade in cryptocurrencies from June 1. They debate whether this is an experimental move that could lead to broader acceptance of crypto trading in mainland China, or a nothing burger, a term used to describe an event, idea, or policy that is perceived to be without substance or impact. 12. Celsius Network deal. Lastly, the discussion covers the news that crypto consortium Fahrenheit has won a bid to acquire the assets of the insolvent lender Celsius Network. They explain how the deal will work for Celsius's creditors, depending on whether they are owed more or less than $5,000. Creditors with more than $5,000 will receive a small distribution and become shareholders in a new company, whereas those owed less than $5,000 will receive 70% of their claims back and no equity. The participants express some doubts about the specifics of the deal, particularly concerning the marking-to-market of assets, but they acknowledge that it's generally positive news for creditors. 13. Fahrenheit and FTX 2.0. This segment discusses the potential future of a company named Fahrenheit, presumably a crypto-based company, which is considering offering equity tokens. These tokens would represent a type of ownership stake in the company. The speakers also mention FTX 2.0, which appears to be a crypto exchange that's undergoing a major transformation or rebuilding process. The conversation then shifts to Celsius, likely referring to the crypto platform Celsius Network. One of the speakers expresses skepticism about the potential value of the proposed Fahrenheit equity tokens, indicating a preference for cashing out and getting their money back. 14. Crypto winter. The conversation then turns to a broader discussion of the state of the crypto market. The term crypto winter is used to describe a period where the prices of cryptocurrencies are falling or stagnating for an extended period. The speakers reference a tweet from a user named Icebergy who notes that sentiment in crypto-focused chats is notably depressed. Various veteran crypto users, the OGs, are cited as saying that this bear market is not worse than previous ones, with the general sentiment being that crypto is more developed, better funded, and less likely to face an existential crisis than in previous bear markets. 15. Blend Blur's NFT lending platform. The speakers then discuss the success of Blend Blur's new NFT lending platform, which has seen loan volumes of $308 million in the 22 days since it launched. This platform allows users to use their NFTs as collateral to secure loans, which is a key part of the emerging sector of NFT finance. 16. Coinbase gas-free transfers. Finally, they talk about Coinbase Wallet's new feature that allows gas-free USDC transactions on Polygon. Coinbase will cover the gas fees, making these transactions free for the users. This service uses EIP 3009, a meta transaction that is part of the account abstraction category. The conversation implies that this could be the beginning of a trend where most transactions for retail users end up being free as companies compete for users by subsidizing transaction fees. 17. MoonPay's equity sale. MoonPay, a Web3 payment infrastructure company, sold $150 million of their equity during a Series A round. The company raised a total of $555 million at a valuation of $3.4 billion. However, it's noted that this sale occurred just before a significant crash in the cryptocurrency market, casting the company in a negative light, especially towards its investors. The discussion here points to the fact that venture capital, VC, firms should exercise caution when such sales occur to protect their investments and investors' interests. 18. Paradigm shift towards AI. Paradigm, one of the notable VC firms in the crypto space, broadened its focus from strictly crypto-related investments to encompass artificial intelligence, AI. This transition was signaled by changes in their bio on Twitter and on their website. While some in the crypto community may interpret this as a sign of waning interest in the crypto space, the speakers suggest that VC firms like Paradigm simply follow where they see the most promising opportunities, and that AI is currently perceived as a hot investment area. 19. Binance layoffs. Binance, one of the world's largest cryptocurrency exchanges, announced layoffs, reducing their workforce by 20%. Similarly, Nansen, a crypto analytics company, also laid off 30% of its workforce. The conversation acknowledges that these layoffs might be indicative of the challenging market conditions in the crypto space and are part of a normal market cycle where companies expand and contract based on market dynamics. 20. WorldCoin raises $115 million. WorldCoin, a project co-founded by Sam Altman, former president of Y Combinator, raised $115 million. The WorldCoin project aims to distribute a new cryptocurrency to everyone on Earth, using a unique, biometric scanning method, iScanning, to ensure fair distribution. Despite the perceived dystopian optics, the project has garnered significant VC interest due to its potential to solve the significant issue of identity verification. 21. Magic raises $52 million. Magic, a crypto wallet-as-a-service provider, raised $52 million in a funding round. The company, formerly known as Fortmatic, provides easy-to-use wallet services for non-crypto enthusiasts, with clients including corporate entities like Mattel and Macy's. This practical approach is drawing attention as more mainstream companies look for ways to incorporate and manage crypto in their operations. 22. Potential Ethereum network cap and the issue of centralized control. This section covers a question raised about the potential for the Ethereum Foundation to implement a cap on the maximum share any protocol can control. They discuss the dominance of Lido, a decentralized autonomous organization, DAO, for staking Ethereum, and the possibility of a protocol upgrade to prevent it from gaining majority control of the network. The speakers agree that while the Ethereum Foundation could potentially propose such an upgrade, it's practically impossible to enforce decentralization at the protocol level. 23. The dominance of Lido in Ethereum staking. The discussion continues with the concerns about Lido's growing share of Ethereum staking, which some have estimated to be over 30% of the total staked Ethereum. The speakers point out that the Ethereum community should strive to increase competition and make solo staking easier, rather than rely on DAOs like Lido. They also address the criticism of Lido's explicitly monopolistic goal, arguing that Ethereum should be resistant to such monopoly and that decentralization should be promoted more. 24. The role of Vitalik Buterin in Ethereum's evolution. The speakers talk about the influence of Ethereum co-founder Vitalik Buterin and the impact of his continued leadership on Ethereum, contrasting it with Bitcoin, which does not have a clear active leader. They express their appreciation for Vitalik's continued involvement in Ethereum and the industry more broadly, emphasizing that his influence is more of a spiritual leadership rather than dictatorial. 25. Ethereum's leadership and development. The speakers discuss the role of Vitalik Buterin, the co-founder of Ethereum, in guiding its development. They argue that Ethereum would not be where it is today without Buterin's leadership. They liken Buterin's role to that of the founding fathers of the United States, who continued to guide the country after drafting the Constitution to address problems and questions that arose subsequently. They note that Ethereum's complexity required this ongoing leadership, in contrast to Bitcoin, which was simple enough that its founder could leave after establishing it. They also discuss how Buterin's writings, such as his blog posts on legitimacy, have influenced the ecosystem, shaping the reasons for startups' existence and steering the direction of Ethereum. They suggest that Ethereum could now survive without Buterin, as it is more established and stable than in its early years. 26. The value of enduring interest in cryptocurrency during market downtrends. The conversation shifts to a discussion about maintaining interest in cryptocurrency, specifically during periods of market downturns or bear markets. The speakers agree that those who remain interested and engaged during these periods stand a good chance of benefiting once the market recovers. They suggest that maintaining interest during these boring bits can be challenging but rewarding, as it's during these periods that significant innovations and opportunities often arise. They advise listeners to continue seeking out exciting innovations and potential alpha, excess return, during these periods. Content type, podcast interview. Content publisher, Bankless. Publish date, June 2023. MakerDAO's Endgame, the boldest gamble in crypto history, Rune Christensen. Summary: this podcast conversation features Rune Christensen, who is discussing the future plans and aspirations of MakerDAO. MakerDAO is a decentralized autonomous organization that has introduced DAI, a stablecoin pegged to the US dollar. Their roadmap, referred to as the Endgame, is their plan to make DAI the most commonly used stablecoin in the world. Here are the main points discussed. 1. MakerDAO founder discusses the evolution and challenges of decentralized governance. The main topic in this podcast is the evolution and challenges of MakerDAO's decentralized governance system. Rune, MakerDAO's founder, narrates the journey from inception, the struggle to become a decentralized autonomous organization, DAO, to the pitfalls of total decentralization that affected product development. He also shares his realization about DAOs being intrinsically political due to the allocation of resources and proposes a need for codified rules and governance structures to manage these dynamics effectively, indicating a shift towards a more traditional organizational structure to enhance MakerDAO's operations. 2. The necessity of firm principles in decentralized systems to prevent centralization creep. The main discussion revolves around the challenges in establishing and maintaining rules and principles in decentralized systems, particularly in the context of cryptocurrencies. The speaker asserts that establishing fixed principles is crucial to prevent gradual centralization over time, as a lack of firm principles can lead to a power vacuum that could be exploited for personal gain. Such manipulation, according to the speaker, would eventually drive the system toward centralization, which goes against the essence of decentralized systems. 3. Endgame, unveiling rebranding, new tokens, and global yield farming in crypto transition plan. The discussion is about a MakerDAO's Endgame, which outlines the project's transition through 5 distinct phases. The key focus lies in the first phase involving a major rebranding, the introduction of a new stablecoin and a new governance token, and the establishment of farming mechanisms. The goal is to simplify user experience, make financial products more accessible and enjoyable, and establish a robust, safe yield farming system. However, these farming opportunities will not be available to American users. 4. Phase 2 full launch of Maker to see transformation through sub-DAOs. the podcast discusses the Phase 2 full launch of Maker, focusing on the introduction of sub-DAOs, decentralized autonomous organizations. These sub-DAOs will assume much of the decision-making and responsibility from the centralized Maker governance, promising to be more flexible, innovative, and faster in implementation. Moreover, sub-DAOs aim to appeal to diverse demographics within the crypto community, signifying a new era in DeFi. The tokens for these DAOs will be distributed through a fair launch process using farming, maximizing distribution and encouraging community building. 5. Exploring the potential of AI in ensuring better governance and rule compliance in DeFi systems. The discussion largely focuses on the idea of implementing AI in decentralized autonomous organizations, DAOs, for better governance and detection of deviations from codified rules. The key speaker introduces this as a solution for checking internal power dynamics and potential issues in MakerDAO governance like nepotism or corruption. 6. MakerDAO introduces phases 4 and 5, reinforcing the system's decentralized equilibrium and future-proofing with special-purpose blockchain. The key discussion point revolves around the upcoming 4th and 5th phases in the development of MakerDAO, a blockchain-based organization that provides a decentralized stablecoin. Phase 4, termed Governance Participation Rewards, combats voter apathy by introducing rewards for active participation. Importantly, the system will have established governance rules and AI tools to ensure fair and regulated incentivized voting. Phase 5 will overhaul the system and re-implement it on a special-purpose blockchain, which allows for a decentralized equilibrium where the system can essentially run itself. This blockchain will include a shutdown mechanism for potential emergencies, and provides a resilient and adaptable response to regulatory landscapes. Together, these phases ensure a sustainable, self-regulating, and future-proof design. Content type, podcast interview. Content publisher, Blockworks. Publish date, June 2023. How to fix DeFi with Dan Elitzer. Summary: this episode of Bankless focuses on whether DeFi is broken and explores the solutions to fix it, particularly through Oracle-free protocols. Featuring Dan Elitzer, a veteran in the DeFi realm, the conversation also discusses his insights into why DeFi seems to be failing and how to make it more secure and efficient. Topics such as protocol synthesis, risk dependencies, and oracles are addressed. Here are the main points discussed. 1. Understanding the dangers of DeFi's current state and the potential solution through Oracle-free protocols. The podcast primarily discusses issues within the decentralized finance, DeFi, sector, noting that $3.8 billion was lost in 2022 due to hacks and exploits. The conversation highlights the need for more reliable and secure protocols to make DeFi a more viable option for global finance. The host suggests that Oracle-free protocols might be the solution to these security issues, emphasizing the necessity to go back to basics and re-evaluate current DeFi systems. 2. The danger of excessive dependence on external dependencies in DeFi. The core discussion is about the risks associated with DeFi protocols relying heavily on external dependencies, particularly oracles like Chainlink, to function effectively. Concerns are raised about the vulnerabilities this creates across the DeFi ecosystem, with a potential failure of a major oracle network, such as Chainlink, possibly leading to widespread disruptions. The speaker argues for reducing reliance on these external dependencies, instead fostering an on-chain-centric world where the primary market operations happen within the blockchain itself. The ultimate goal is to make DeFi protocols more self-reliant, secure, and resilient against potential failures or exploits. 3. The authenticity and future of decentralized finance, DeFi, discussed. The key discussion revolves around the definition of decentralized finance, DeFi, and its true representation. The talk emphasizes that genuine DeFi platforms, like Uniswap, should function without any external off-chain dependencies, such as oracles. The need to return to trustless systems, devoid of external influence, is also highlighted. The future of DeFi may see a shift from automated market makers, AMMs, to order book models for increased efficiency and robustness, thereby enhancing the architecture of a decentralized financial system. 4. The emergence of Oracle-free DeFi apps. Bring your own Oracle. The conversation primarily discusses the advent of Oracle-free decentralized finance, DeFi, applications. In this model, the traditional function of price oracles, external entities that provide real-time price data, is replaced by user-generated pricing based on each participant's comfort and perceived value of assets. In these peer-to-peer contracts, each party defines their own terms, which removes the dependency on oracles. While this approach could potentially introduce liquidity issues, it also mitigates the risk of a protocol's failure if the oracle goes dark. The evolution towards oracle-free protocols hints at a new era of DeFi, bring your own oracle. 5. The future of DeFi might be oracle-free. The significant discussion point of the podcast is the potential shift towards oracle-free, dependency-free protocols in decentralized finance, DeFi. This paradigm aims to mitigate risks associated with price feed manipulations, protocol exploits, and system insolvencies. It advocates for transparent, predetermined responses to worst-case scenarios, allowing individual participants to engage in the market based on their risk preferences without fragmenting liquidity. The interlocutors believe this approach will increase market resilience and security, predicting a potential shift towards oracle-free lending and borrowing protocols. However, they acknowledge the challenges associated with this shift. Content type, podcast interview. Content publisher, Bankless. Publish date, June 2023. Bitcoin's solution to the inflation paradox, Jeff Booth. Summary: in this episode of On the Margin, Jeff Booth, entrepreneur, author of The Price of Tomorrow and general partner at Ego Death Capital, joins the show for a discussion on the exponential growth of AI. Here are the main points discussed. 1. Unsustainable $400 trillion global debt and AI's role in exacerbating wealth inequality. The most important point discussed in this conversation centers around the escalating global debt, currently at a staggering $400 trillion, and the role of artificial intelligence, AI, in exacerbating wealth inequality. The speaker highlights the deflationary impact of AI, which lowers the cost of goods and services exponentially, alongside a system of increasing debt that would collapse if prices fell. This creates a paradox where economic gains from AI productivity are concentrated in fewer hands, leading to growing socio-economic unrest. Bitcoin, according to the speaker, is seen as a solution to this paradox. 2. AI and blockchain, dual technologies reshaping economic productivity in global labor market. The key discussion revolves around the impact of artificial intelligence, AI, and blockchain technology on global economies, specifically regarding deflation, labor markets, and the evolving dynamics of wealth distribution. The speaker highlights AI's potential to enhance productivity while significantly lowering production costs. Similarly, blockchain technology, exemplified by Bitcoin, is discussed as a potential buffer against inflation and economic manipulation. These technological developments could fundamentally shift labor markets, potentially leading to the replacement of significant human labor with more cost-effective AI-driven alternatives. 3. Shift in Overton window. Money printing might indicate weakness rather than strength in the podcast. A crucial point discussed revolves around the Federal Reserve's monetary policy and its implications. The participants consider the potential negative consequences of the extensive money printing enacted to counteract crises such as the COVID-19 pandemic in 2020. They suggest that an Overton window shift could occur, where the staggering amounts of money being printed might begin to look like a sign of weakness instead of strength, causing public panic. They also discuss the possible impact of a deflationary collapse, signaling that uncontrolled money printing could have significant adverse effects on the economy. 4. The Bitcoin thesis, revolutionizing the economy and societal infrastructure. The speaker discusses the potential of Bitcoin, not just as a store of value, but as a protocol change for society. The conversation delves into the analogy with the development of the Internet and suggests Bitcoin's blockchain can serve as the base layer for further protocols, opening new opportunities for entrepreneurs. The decentralization and security of Bitcoin are emphasized, and its potential as a catalyst for energy abundance globally is highlighted. The idea is that, much like the evolution of the Internet, layers will be built on top of Bitcoin's blockchain, transforming various facets of society. Content type, podcast interview. Content publisher, Blockworks Macro. Publish date, June 2023. unifying liquidity in a non-composable world. Summary: this episode of the Logan Jastremski podcast features a deep dive into the challenges of blockchain scalability, focusing on the shift towards modular and application-specific blockchain solutions. The host interviews a seasoned crypto professional, who discusses his experiences with major projects like Aave and Ripple, and his current work at Catalyst. They also explore the potential for a proliferation of chains or role UPS, and the importance of customizability within blockchain ecosystems. Here are the main points discussed. 1. Scaling blockchain with modular architecture, unleashing an explosion of chains. The interview primarily revolves around exploring ways to scale blockchain technology, focusing on the emergence of modular blockchains, or rollups. The speaker's unique insight, which he developed while at Aave, led him down a path of creating application-specific environments. He believes we are on the verge of an absolute proliferation of chains, as services simplify the process of building blockchain infrastructures. This modular approach, he argues, provides a more optimized and tailor-made solution for specific use cases compared to traditional, monolithic chains. The discussion suggests this is a nascent but rapidly developing area in the blockchain space. 2. Catalyst is reinventing cross-chain liquidity by automating and extending dApp interaction. The core discussion revolves around the challenges and limitations of interacting with decentralized applications, dApps, and DeFi protocols, particularly concerning the high costs associated with using the Ethereum-based chain. The podcast further examines Catalyst, a solution designed to provide seamless, cost-effective cross-chain liquidity for millions of chains. Catalyst aims to solve these issues by utilizing three principles: automation, permissionless interaction, and extensibility, with the unit of liquidity as the cornerstone concept, ensuring value can move smoothly between chains. This system ultimately intends to prepare for a future of potentially exponential chain proliferation. 3. Catalyst, a decentralized liquidity layer, operates without tokens or infrastructure maintenance. In the conversation, the key point discussed revolves around Catalyst, a decentralized liquidity layer for blockchain interoperability. Unlike many bridging solutions, Catalyst operates without using tokens for value transfer, mitigating risks associated with wrapped assets. Furthermore, it works by using a mathematical representation of assets, referred to as units of liquidity, which can be easily implemented in any Turing-complete machine, facilitating extensibility across various blockchains. The team also emphasized that they don't maintain their own node infrastructure. Instead, they outsource message passing to other arbitrary messaging protocols, further minimizing trust assumptions. 4. The future of blockchain, composability, latency, and liquidity across multiple chains. The speaker discusses the challenges and benefits of operating in a multi-chain blockchain environment. This includes the latency issues that can arise from message passing between different blockchain ecosystems, the composability across Layer 2 solutions, and the potential for liquidity fragmentation. The speaker also emphasizes the importance of building infrastructure to manage these challenges, while highlighting the role of the solver network, which reduces latency and allows for atomicity in transactions. Finally, the speaker shares that end users may not need to know the specific details about the blockchain they are interacting with due to abstraction layers. 5. Blockchain scalability and customizability, a dual conundrum. The main point discussed revolves around the future of blockchain architecture, with a particular focus on the challenge of scalability and customizability. The speaker posits that despite the differences between monolithic and modular chains, all blockchain architectures will eventually resemble one another, especially concerning high data availability at the base layer. However, the customization aspect, such as developing personalized opcodes or gas tokens, becomes challenging on a monolithic chain. A point of interest also emerged around blockchain sovereignty, allowing for greater control over factors like block times. Content type, podcast interview. Content publisher, Logan Jastremski Podcast. Publish date, June 2023. The good and bad in the market right now. Overpriced JPEGs. Summary: this episode of Overpriced JPEGs features a recap of cryptocurrency news, specifically in relation to non-fungible tokens, NFTs. The hosts discuss various projects such as overpriced JPEGs, Galaxy, and OpenSea. They also talk about recent developments in the meme land community and comparisons between different NFT projects like Pudgies, VeeFriends, and Doodles. Here are the main points discussed. 1. The rise of meme land and a possible maturation of NFT markets. The podcast primarily revolves around discussions on the current state and evolution of the NFT, non-fungible tokens, market. Gavin Purcell and the host discuss several NFT projects, with a notable focus on Meme Land, a popular NFT project. They discuss the anticipation for the project's new token launch and how its founder, Ray Chan, expertly leverages his experience in internet culture to keep the community engaged. There's also a suggestion of a possible maturation of the NFT market, as volume returns and less quick-flip projects are seen, indicating potentially more sustainable growth. 2. Doodles partners with Camp for retail experience, leaning into metropolitan appeal. The key point in this discussion is Doodle's strategic partnership with Camp, a retail and immersive experience company. This collaboration aligns with Doodle's metropolitan vibe and aims to reach affluent consumers through unique retail experiences. The partnership represents Doodle's focus on real-life activations and the expansion of its brand beyond its traditional digital and crypto-focused audience. This partnership also highlights Doodle's unique approach towards maintaining its core audience while slowly inching towards different, more mainstream markets. 3. Satire, scams, and the unsettling underbelly of the crypto space. The conversation primarily centers on the exploitative aspect of the current cryptocurrency era. A crucial point raised is the prevalence of scams and unscrupulous practices, particularly in the context of shitcoins, inferior or scam cryptocurrencies. It highlights the often predatory nature of these coins and the gullibility of individuals looking for quick wealth, leading to losses for those not directly involved in the coin's creation. The speakers emphasize the need for caution when investing in such projects, given the risk of fraud and deceit. 4. Misplaced trust and lack of due diligence evident in crypto scams. The discussion mainly centers around how trust and genuine intent can be exploited in the crypto space, as seen in scams Andrew Wang fell for. His trust and desire to make a difference led him to endorse projects that later proved to be fraudulent, leading to backlash. The conversation stresses the importance of individual due diligence in any investment, regardless of endorsements from influencers or trusted figures. These incidents serve as reminders that scams can be sophisticated and long-lasting, reinforcing the necessity of skepticism and rigorous research in the crypto world. Content type, podcast interview. Content publisher, Overpriced JPGs. Publish date, June 2023. Will Cosmos or Ethereum win the modular war? GG Research. Summary: Imran and Xiao bring on Mohammed and Dimitri to dive deep into the ongoing battle for modularity supremacy between Cosmos and Ethereum. Here are the main points discussed. 1. Complexity of the modular thesis in blockchain networks, a hindrance or a boon? The conversation revolves around the modular thesis of blockchain architecture, where the network is compartmentalized into consensus, data availability, execution, and bridging layers. Participants discuss how this may improve scalability but express concerns over increased complexity. Ethereum's transition towards modularity is highlighted as a case study, with Solana mentioned as a contrasting monolithic model. The key question raised is whether the complexity introduced by modularity is too overwhelming for builders and engineers in the space, potentially inhibiting innovation and adoption. 2. Data availability, DA, constitutes significant portion of costs in Layer 2 Ethereum transactions. The primary point discussed revolves around the costs of data availability, DA, in Layer 2, L2, Ethereum protocols. Currently, DA accounts for around 80% of the transaction cost when settling data from a rollup onto Ethereum Layer 1. The Ethereum Improvement Proposal, EIP 4844, and similar solutions aim to significantly reduce this cost by storing data off-chain, making transactions more affordable for developers and users. Different mechanisms, such as storing data on a third-party service like AWS, are being explored to achieve this goal. 3. Headline: The development and implications of L3 blockchain architecture. The conversation primarily revolves around the concept of L3 blockchain architecture, its differences with L2 app chains, and their benefits and drawbacks. The L3 design provides increased customizability and presents business model opportunities, including the possibility of having a unique gas token. However, the conversation also highlights potential challenges with atomic composability between L2 and L3 chains, as well as the possibility of having shared sequencers to improve interactivity and transaction ordering across multiple rollups. Ultimately, the discussion emphasizes that the potential of L3 is still theoretical and exploratory. 4. The development and implications of L3 blockchain architecture. The conversation primarily revolves around the concept of L3 blockchain architecture, its differences with L2 app chains, and their benefits and drawbacks. The L3 design provides increased customizability and presents business model opportunities, including the possibility of having a unique gas token. However, the conversation also highlights potential challenges with atomic composability between L2 and L3 chains, as well as the possibility of having shared sequencers to improve interactivity and transaction ordering across multiple rollups. Ultimately, the discussion emphasizes that the potential of L3 is still theoretical and exploratory. 5. Potential of shared sequencers and atomic composability in rollups. The main discussion centers around the possibility of atomic composability and the future of cross-rollup bridges. Atomic composability refers to executing complex operations spanning multiple blockchains or rollups in one atomic, indivisible operation. While there's a disagreement about its current feasibility, both speakers agree on its significance. They also explore the role of shared sequencers, nodes that manage transaction ordering across multiple rollups, positing a future where these could be decentralized to enhance composability and security. Nevertheless, concerns are raised around potential incentive misalignments, the complexity of ensuring transaction reverting, and the impact on consensus. 6. Potential of shared sequencers and atomic composability in rollups. The main discussion centers around the possibility of atomic composability and the future of cross-rollup bridges. Atomic composability refers to executing complex operations spanning multiple blockchains or rollups in one atomic, indivisible operation. While there's a disagreement about its current feasibility, both speakers agree on its significance. They also explore the role of shared sequencers, nodes that manage transaction ordering across multiple rollups, positing a future where these could be decentralized to enhance composability and security. Nevertheless, concerns are raised around potential incentive misalignments, the complexity of ensuring transaction reverting, and the impact on consensus. 7. The future of decentralized sequencers and implications for regulatory, community, and composability aspects. The most important point discussed revolves around the deployment and potential decentralization of sequencers in Layer 2, L2, blockchain networks. The conversation primarily focuses on the potential regulatory push, community engagement, and the need for composability or asynchronous composability between different L2 networks. A key focus was the integration of decentralized sequencers within systems like Astria and Espresso. Their model potentially paves the way for a shared composability network, addressing how the systems might achieve decentralization while maintaining functionality. 8. Ethereum L2 advancements threaten Cosmos' competitive edge. The key discussion focused on Cosmos' struggle to retain its competitive edge in the face of advancing Ethereum Layer 2, L2, technologies. While Cosmos pioneered modularity in blockchain architecture, Ethereum's network effects and recent technical innovations such as the ability to run arbitrary code on L2, are posing a significant threat. Additionally, discussions around shifting security models in Cosmos, between shared and mesh security, demonstrate the platform's search for differentiation in an increasingly competitive landscape. One crucial comment suggested that Cosmos has around 12 months to create unique value or risk being overshadowed by Ethereum's growing capabilities. 9. Argus Labs introduces World Engine, a sharded rollup SDK for on-chain gaming, built on Cosmos. The discussion revolves around Argus Labs' development of World Engine, a sharded rollup SDK created to horizontally scale on-chain games on Cosmos. Participants discuss the potential of this technology, offering mixed sentiments about Cosmos, from bearish to neutral. Some participants express optimism regarding Cosmos's developer-friendly interface and modular infrastructure. However, there's also apprehension about the platform's capability to capture value compared to Ethereum, and questions regarding the necessity for each application to have its own chain. The consensus is Cosmos and Ethereum could potentially coexist, albeit targeting different use cases. Content type: podcast interview. Content publisher: Good Game Podcast. Publish date: June 2023. The Theory and Practice of Web3 Auctions, Scott Duke Cominers and Michael Zhu. Summary: this video examines the role of auctions in Web3 with Scott Duke Cominers, A16Z Crypto, Harvard Business School, discussing key terms, auction types, and their purpose. Michael Zhu, A16Z Crypto research engineer, then explores how these concepts apply to permissionless blockchain auctions, highlighting unique constraints and opportunities. Here are the main points discussed. 1. The importance of auctions for efficient resource allocation in Web 3.0 business models. The discussion centers on the importance of auctions, particularly in the context of Web 3.0 businesses. Auctions are highlighted as a fundamental way to solve complex allocation problems, key to matching resources with those who value them most. They provide a mechanism for price discovery, effective allocation, and transparency, making them a crucial component in the design of business strategies. While the highest bidder often aligns with maximum value, considerations of diversity, security, and overall system welfare may influence the allocation process. Real-world application and theory-practice transition are also underlined. 2. The intricacies and impact of auction design in cryptocurrencies. The discussion emphasized the importance of understanding auction design, particularly in the context of cryptocurrencies. The speaker highlighted that the method of auctioning off goods, example, tokens, can significantly impact not only the direct outcomes of the auction, like revenue generation and efficiency, but also the broader ecosystem surrounding the asset. For instance, auction designs influence bidder behavior, transparency, equity, privacy, collusion resistance, and overall market dynamics. In addition, the speaker touched on different auction styles, such as ascending versus descending and open versus sealed bids, and their diverse implications on privacy and information revelation. 3. Understanding cryptocurrency auction mechanisms, descending pay-as-bid versus descending clearing price. The video involves an in-depth discussion of two cryptocurrency auction mechanisms, the descending pay-as-bid and the descending clearing price methods. The main point revolves around understanding the differences, advantages, and disadvantages of these auction methods. The descending pay-as-bid model offers predictability, as bidders know what they'll pay if they win. It's also more intuitive and harder for the auctioneer to manipulate. However, it encourages a bidding war towards the end, potentially disadvantaging those who value the item most. In contrast, the descending clearing price auction tends to be more equitable, since all winners pay the same final price, though it may confuse inexperienced bidders. 4. Descending clearing price auctions, fairness and simplicity in bid dynamics. The speaker advocates for descending clearing price auctions as they exhibit fairness and simplicity. This auction format ensures price discovery without exploiting the highest bidders, who are likely the most dedicated to the product or service. The simplicity of the format lies in the bidding process, where bidders can propose their value and leave, and the avoidance of a potential gas war at the auction's end. Such a system also supports the concept of everyone paying the same price for identical goods, adding to the fairness argument. 5. Blockchain technology could enhance auction credibility but poses challenges. The speaker discusses how implementing auctions as blockchain-based smart contracts can make them static, truthful, and credible. Despite the inherent synergy between blockchain and auctions, implementing all auctions on the blockchain isn't straightforward due to certain challenges such as gas costs, miner extractable value (MEV), privacy concerns, and smart contract security. Various on-chain constraints can affect the design choices in auctions, influencing their incentives and outcomes. These constraints and the ensuing design choices have even given rise to innovations like automated market makers, AMMs, on the blockchain. 6. Enhanced privacy and cross-chain auctions identified as key future trends in on-chain auction design. the conversation focused on innovations in on-chain auction design, notably the possibilities of implementing privacy-sealed bid auctions and cross-chain auctions. The former could potentially hide bid values, while the latter offers opportunities for on-chain components on multiple blockchains, useful in a multi-chain future. Also discussed were strategies for domain name auctioning, exploring how best to allocate and maintain domains for optimum platform utility. Content type, podcast interview. Content publisher, A16Z Crypto. Publish date, June 2023.